Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. And today I want to talk about an important topic. What will happen when the government ends its support of the economy and the stock market? But before we get into that, I want to remind you that you can subscribe to this channel by simply clicking on the link below. What is going to happen to the market? What's going to happen to your stock portfolio when the government ends its easy fiscal and monetary policies? We've seen unprecedented stimulus during the pandemic. The government spending has been really something to behold, many trillions of dollars. And to give you an idea, a billion seconds ago was only about 31 years ago. But a trillion seconds ago was 31,000 years ago. So when we talk about trillions of dollars, that's very substantial stimulus to the economy. The other thing, of course, is that the Federal Reserve has thrown everything but the kitchen sink at the market by keeping interest rates near zero on the short term, on the short end of the spectrum, I should say, and at the same time, keeping bond yields low with its bond purchases. So by doing that, it's suppressed interest rates. It makes it cheaper for consumers to borrow, cheaper for businesses to borrow, cheaper for governments to borrow. And as a result, that's all been good for the economy, good for the market. But what happens when it ends? Well, I'm pleased to tell you that those are two supports for the market, but by far they're not the biggest support. What drives share prices higher over the long term is not just interest rate policy or fiscal policy, it's rising corporate profits. You can look back through history, you will not find a single example of a company that increased its sales and earnings year after year without the share price tagging along. And by the same token, you won't find companies with flat sales and declining earnings whose share prices continue to go up. So ultimately, share prices are determined by the profits of the company. And if you look at what's happening in the economy, the technological innovation that's happening, the efficiencies as a result of increasing digitization of the economy, and the enormous pent-up consumer demand for goods and services after this lockdown that's lasted nearly a year and a half, there are good reasons to believe that sales, earnings, and share prices are going to get higher. So you're going to hear that there will be some moderation in government spending and Fed policy over the months ahead, but it's not really a bad thing. It's almost like hearing that a patient is getting out of the ICU. You're not going to need all that additional support anymore. So I'm looking forward to the day where stocks can stand on their own feet and markets will head higher based on business fundamentals and not government interference. So that's it for today. I'll remind you that you can read all my investment commentary at Liberty Through Wealth. It's completely free. So just visit libertythroughwealth.com and feel free to sign up. Thanks so much.